Hello everyone, hope you are doing well. So welcome to this next session of Economics for Finance. In the previous sessions, we have been discussing Chapter 1, Unit 1, where we have already covered a major part of that unit. So far, we have covered the meaning of national income, the significance of national income. We also have covered the various concepts of national income, which includes GDP, NDP, GNP, NNP, per capita income, personal income, and personal disposable income. Right? We are going to have a quick recap of the last session that we have covered, that was about measurement of national income, and then we are going to start with today's topic. In the measurement of national income, we understood that there are three methods through which national income can be measured. The three methods being value-added method, income method, and the expenditure method. Okay, to give you a quick overview of these methods, if I start with value-added method, what is value-added method? It tries to measure the national income by adding up the value added by three different sectors of the economy. Which are the three sectors? Agriculture, industry, services. And how do we do that? What is the functional approach of this particular method? So, the entire economy is divided in three sectors. Each sector further divided into subsectors. Subsector further divided into commodity groups or service groups. And in each commodity group or service group, there are multiple producing enterprises which are working. Our job is to calculate gross value added or net value added for each producing enterprise. How do you find out gross value added? Gross value added is nothing but the total value of output minus the intermediate consumption. Okay, and if we want to find out net value added, then it is nothing but GVA minus depreciation. Correct? Gross and net, the difference is nothing but depreciation. Okay, so that is GVA, NBA. The NBA of all such producing enterprises in the domestic territory of the country, that will, when added, will give us the NDP at market price of the economy. Okay, NBA, if we add NBA of all producing enterprises, we get NDP at market price. If we add GVA of all producing enterprises, we get GDP at market price. Okay, so that is done. Based on that NDP market price, we can easily find out an Ndpfc using the three fundamental differences that we have covered. Okay, so that is method number 1. The method number 2 that we learned was income method. Income method tries to measure the national income by adding the factor incomes paid out by all the producing units in the domestic territory of the country. So we add rent, wages, interest, profit, which has been paid out by all the producing units within the domestic territory of the country. Okay, and for this purpose, the incomes are divided in three parts. Which three parts? Labor income, that is compensation to employees, non-labor income, also known as operating surplus, and mixed income. Okay, labor income includes salaries, wages, commission, bonus, employer's contribution to PF, and any compensation which is received by employee in kind, but does not include pension because it's a transfer income. Similarly, non-labor income includes RIP, rent, interest, profit, not rest in peace, rent, interest, and profit. Okay, and then coming to mixed income, it includes all those incomes which cannot be classified under any one head. Right? Okay, so you add all these incomes, what do you get? You get NDP at factor cost. Please remember that under income method, the default calculation will be at factor cost because you are adding rent, wages, interest, profit. Okay, so it will be at factor cost. It's net because we have not added depreciation anywhere, and it's domestic because we have considered the rent, wages, interest, profit paid out by all producing units in the domestic territory. Okay, so this was income method. Then we jump to expenditure method, quite important. Expenditure method tries to measure the national income by adding up the expenditure on final goods and services made by the people of the country. So how do you find it out? There are 4 types of expenditures that we are supposed to be covering here: consumption expenditure, investment expenditure, government expenditure, and net exports. Okay, C plus I plus G plus NX. That is the equation that we learned, the formula that we learned. Okay, and one more thing that is very important here to remember is that difference between GDCF and NDCF. Gross domestic capital formation and net domestic capital formation. See, you add final consumption expenditure with GDCF and net exports. GDCF, okay, then the sum of these 3 is going to be your GDP market price. But if you add your final consumption expenditure with NDCF and net exports, then it is going to give you NDP at market price. So the difference between that gross and net depends upon GDCF and NDCF. So please read the question carefully and then try to attempt it. Okay, this is one very important thing that you need to remember when you are solving your numericals by expenditure method. Okay, so these were the 3 methods that we covered, and today's topic we are going to take up a regional system of accounting. That is a very small chotu topic that we are supposed to be covering, and then after we are going to discuss some limitations of national income. Lastly, we will be solving some numericals. Okay, so without any wait, let's quickly jump to today's topic. So first topic for today, that is regional system of accounting. Now sir, what is this about? See, regional system of accounting tries to apply the fundamentals and concepts of national income at regional level. Okay, sir, why do we need to do that? See, national income is calculated for the entire nation. So if you want to compare India's economy with another country's economy, you can compare it based on national income. But sir, what if we want to compare the one state or one district's economy with another state or another district's economy? That would not be possible through national income, right? For example, if you want to compare the economy of Punjab and Maharashtra using national income, it's not going to be possible. And therefore, to make comparisons between different states and different regions, different districts of a country, we developed this concept, regional system of accounting. Okay, let's see what it's about. The regional accounts help decision making at regional level. All the states and union territories of India compute state income estimates and district level estimates. State income estimates as well as district level estimates. State income, ya to what is also known as net state domestic product, NSDP, is a measure of monetary terms of the volume of all goods and services produced within the state within a year without duplication. Okay, see, it's very similar. The definition that you are learning here, the meaning that you are learning here is quite similar to what we learned while learning GDP and NDP and all. Okay, the only difference is that it is done at state level and district level rather than at the national level. That's the only difference. Okay, so you have to remember that state income is also known as NSDP. Okay, it's the monetary terms, measurement in monetary terms of all goods and services produced in the state within a year, accounted without duplication. The per capita state income can also be obtained. Just like you obtain per capita national income, per capita state income can also be obtained. Simple. How do you do that? You divide the NSDP, which is nothing but the state income, by the mid-year projected population of the state. You wanted to find out per capita income of the nation. You were dividing national income with the population of the country. The same way, you want to find out the per capita state income, you are going to divide the state income with the population of the state. Simple. Okay. And who will be taking up this responsibility? Who is supposed to be measuring these state incomes? So the state level estimates are prepared by state income units in the respective state directorates of economics and statistics. Directorates of economics and statistics are also known as DES. Each state will have their own DES. Okay, and there are these income units, state income units, which are working under them, and they will be the ones which will be measuring the state incomes. Okay, so this is an overview of regional system of accounting. Right now, a very interesting point here in regional system of accounting is supra-regional sectors. Okay, something known as supra-regional sectors. It's a very important concept. For 2 marks, you can consider this as quite important. It's very concise and customized to be asked for a 2-mark question. So, what do we mean by supra-regional sectors? Okay, so whenever we are calculating the state incomes, now there might be some areas which we cannot entirely identify to a particular state, like railways, posts, defense. These are the areas which cannot be particularly identified to a single state. Then how do you consider them as state income whenever you are calculating state income? Under which state will you put these heads? It's very difficult, right? Such areas are known as supra-regional sectors. And these supra-regional sectors are calculated for the whole nation first of all, right? Because they cannot be identified clearly to a particular state. So they are calculated for the entire nation, and then they are segregated, then they are distributed based on some relevant indicators, whatever the government decides. Okay, see. In the preparation of state income estimates, the income contribution of certain activities such as railways, communications, banking and insurance, central government administration that cut across state boundaries cannot be assigned to any one state directly. These cannot be assigned to a particular state. These are known as supra-regional sectors of the economy. The estimates for these supra-regional activities are compiled for the economy as a whole. They are compiled, they are gathered for the economy as a whole and then allocated to the states on the basis of some relevant indicators. Then they are allocated to the state. Okay, first they are compiled for the nation, then distributed among the states based on some relevant indicator. Okay, fine. So that was supra-regional sectors. So this was regional system of accounting. Fine, very chotu topic, quite possible that it might be asked for a 2-mark or a 3-mark question. So very high chances for that it fits properly to this category, So please make sure that you understand this properly, right? Now going to the last topic of the unit, that is limitations of national income accounting. Okay, see, so far we have praised national income. In our eyes, national income has been the superhero, which helps us to understand the measurement, the performance of the nation. It helps us to, compare our economy with another economy. So many usefulness we have understood while we were discussing about the significance of national income. So we, in our minds, somehow have already believed that national income is one of the best performance indicators for the economy. However, that's not exactly true. There are some major limitations while using national income to understand the performance of the economy. And what are those limitations that we are going to discuss here? Okay, the reason because of which these limitations are kept at the very end of the unit is that if we would have read and understood these limitations at the beginning of the unit, we might probably not even want to learn about national income. Okay. Not that you were very enthusiastic otherwise as well, but you will like leave it aside. Okay, you will see national income so full of flaws that you will not want from your heart to understand anything about national income. So that is the reason this has been kept at the end of the unit. But still, the limitations are very interesting. They are going to give you altogether a new insight about national income. What all are those parts which national income and GDP are missing out on? That you are going to clearly understand in this discussion. So pay attention. So we are going to learn all those points which the GDP misses out on. Okay, so GDP ignores the following. Please remember whatever we are discussing next is about what GDP ignores. These are all those things which GDP does not take into account, but ideally it should have. In order to understand, in order to properly evaluate the performance and economic well-being of people, it is important to have covered all those things which actually GDP has left out. Okay, so what are all those things? First, the income distribution. I don't even feel like reading this point any further. The very words here catch my attention. GDP ignores income distribution. Now, what do I mean by that? What I mean with it is that GDP calculations nowhere tells you that how the incomes have been distributed. Right? Ironically, the increase in GDP does not only become the sole measuring rod for understanding the performance of the economy. For that, you also need to know how that increased GDP is being distributed among the people of the country. So there have been cases where the national income of the country keeps on rising at a very fast pace. The national income goes on rising at a very fast pace, but the benefits of that increased national income is not spread evenly throughout the country. And that is the reason because of which the standards of living of the people is not uplifted. Ultimately, whenever you are considering development, the ultimate sign of development is what? The improvement in the standard of living of people. But the increased GDP cannot help us achieve that unless that increased GDP is properly distributed. Now, nowhere in the GDP calculations we can understand about the distribution of income. And that is a very, very major flaw in the GDP calculations that we have been working on so far. It does not tell you about the distribution of income. Okay, see. So GDP ignores the income distributions, and therefore GDP per capita is a completely inadequate measure of welfare. Sir, per capita income tells us the distribution, right? No dear. Per capita income is only an average. How can per capita income give you the distribution of income? If I tell you that the per capita income of India is, for example, 50,000 rupees, what do you mean by that? That each individual in India every year earns 50,000 rupees. How accurate do you think that is? It's far from truth, far from the reality, right? So per capita income does not give you the distribution, it only gives you an average income. Okay. The countries may have significantly different income distributions and consequently different levels of overall well-being for the same level of per capita income. So it's quite possible that two countries have same per capita income, but the well-being of the people in both the countries are different only because the distribution of income in both the countries are different. So for the same per capita income, they can have different distributions of income, and therefore both the countries can have different levels of well-being. But this will not be considered anywhere while calculating GDP and per capita and national income and all that. Okay. Second, GDP does not consider the quality improvements in systems and processes. See, GDP is a measure of quantity, right? It does not consider quality improvements in the systems, in the processes, which majorly arise due to technological as well as managerial innovations. Due to technological innovations, due to managerial innovations, whatever improvements have been seen, whatever innovations are being made, the processes are improving, that is not considered in GDP. But don't you think that all these things are great contributors in the development of the nation? A country which was not so well with management, which was not so good with, for example, systems and processes, now that country is improving upon their systems, improving upon the processes, their management is improving, their technological advancement is being done. Don't you think this is a sign of development? It is. But does GDP and national income cover it? No. Okay. Third, GDP ignores the productions hidden from the government authorities. GDP does not consider the production that is hidden from the government authorities. Sir, why would people want to hide their activities from the government? Because we love to hide. We love secrets, especially if they make us rich. Right? So why do people hide? Number one, either whatever activities they are performing are illegal. Correct? That is one reason to hide. And second, because the activities, the income that they are generating through those activities, they don't want to show it to government to evade taxes. Okay, so hiding these activities is quite common, and whether legal, whether illegal, hiding is quite common, and therefore whatever GDP we calculate will obviously not give us a true picture of the production being undertaken in the country. Okay. Non-market production and non-economic contributors. Okay, generally those activities which are non-economic, that is, they are not done with the intention of earning something, such activities are not covered in GDP. GDP takes into account only the activities which are done with the purpose of earning something commercially, right, for market exchange. But those activities which are not done with the intention of earning something, non-economic activities, they are not considered as a part of GDP calculation, and therefore such non-economic contributors are also not considered in GDP, like the well-being, the health of the country's citizens, education level, political participation, social and political factors that may significantly affect the well-being levels. These are not covered. Okay, so GDP does not tell you how healthy are the lives of the people. GDP does not tell you how educated the people are. Right? GDP does not tell you that what is the political participation of people. What is political participation? How many people vote? Okay, so GDP does not tell you. But try to understand, guys, that in order to evaluate the well-being of the people, in order to gauge the level of lifestyle that the people are leading, it is important to understand these aspects. But GDP does not cover it. Okay. Next. The list still continues. Okay. This is my favorite point. The disutility of loss of leisure time. GDP ignores the disutility of the loss of leisure time. So what do you mean by it? See, I'll tell you. Every individual can spend his time doing two types of activities from economic point of view. Two types of activities, okay? One is labor, the other is leisure. Labor and leisure. Labor means that he is spending his time working, okay? Leisure means he is spending his time relaxing, whether he is relaxing or sleeping or eating or spending time with his family, watching a movie, going out on a picnic, whatever he's doing it for his own happiness. He is not working. Then that time is known as leisure time. So from economic point of view, a person will be able to devote his time either for labor or for leisure. Now, the general mindset is that people don't want to work. They don't like to work. That is the general tendency. A few exceptions are there, I agree, but generally people don't like to work. So whenever they have to devote some time to labor by reducing their leisure time, it does not make them happy. They feel disgruntled, dissatisfied, unhappy. Okay, now consider that in order to increase the GDP of the country, the government passed a new rule. It made a new rule which says that every individual who was so far working in a 10-hour shift, or let's say a 9-hour shift, every individual, whether in private sector or in government sector, who was so far working in a 9-hour shift will have to work for 10 hours every day from now on. Okay, so government made this rule that every individual is supposed to work for 10 hours a day. So imagine countrywide, every individual who was working for 9 hours initially, now he is working for 10 hours. So he is spending 1 more hour at work. Now that is definitely going to increase the production of the country. Beyond doubt, okay, it will increase the GDP. But at the same time, try to understand that since that person has to devote 1 more hour to labor, reducing his leisure time, it will make him unhappy. The GDP, though seems increasing, it does not count the unhappiness of the people, the dissatisfaction of the people that is also increasing along with. Right? Ultimately, whenever you say that there is a development, that means people are happy. They are living a good standard of living. They are enjoying a good standard of living. They have a good life. They are happy with what they are doing. Right? Physically, mentally, they are at peace. That is development. Right? That is a good life. Correct? But unfortunately, GDP does not take into account this dissatisfaction part, which is created in the process of increasing that GDP. Okay, so on one side you see the GDP rising, but on the other side you don't see that with the GDP number, at least you don't see that the dissatisfaction of the people is also rising. Just by looking at the GDP, you feel okay, wow, the country is doing well, the GDP is increasing, but actually the people are getting more and more dissatisfied. Okay, so that is disutility of the loss of leisure time. Disutility means dissatisfaction. So this is how people become, right, when they have to work more. Okay. Next, economic bads. What are economic bads? We already have discussed this. These are not goods, these are bads, like crime, pollution, traffic congestion. Correct? So we all have witnessed a similar kind of situation, especially if you are living in a bigger city. I'm sure you might have faced this very often. So on one side, we are trying to increase the GDP of the nation, and we are quite successful in that as well. But on the other side, we are not able to comprehend, we are not able to understand these negative sides of it. The negative sides being increase in crime rate, increase in pollution, increase in traffic congestion. GDP does not account these anywhere. The GDP number that you look at does not tell you that, okay, because of this GDP increase, the pollution has increased this much. Because of this GDP increase, the traffic congestion has increased this much. It will not tell you. And that again becomes one of the major limitations of GDP. Next, the volunteer work and services rendered without remuneration undertaken in the economy, even though such work can contribute to social well-being. So there are volunteers who work for the benefit of the society. But such work is not taken into account, even if it is doing well to the people, even if it is helping them to live a better life. These kinds of work will not be considered in GDP. If the same would have been paid work, it would have been considered. But since it's volunteer, it will not be considered. Okay. Other than that, many things that contribute to our economic welfare, such as leisure time, fairness, gender equality, security of community feeling, all these are also not included in GDP. Nowhere does the GDP tell you that what is the fairness that prevails in the society, what is gender equality, not covered anywhere in GDP, right? So, see, we are not saying that GDP is entirely useless, but what we are saying that measuring the performance of a nation solely based on GDP will not be correct. See, development, standard of living, these are multidimensional views. You cannot just judge that from one perspective, just from one perspective. You need several different angles to analyze that in entirety. Okay, so that is this limitation. Coming to the next limitation, and this is the last point and my favorite. It gives you such a beautiful insight about the national income and what part are we missing on when we are studying just national income and GDPC. So GDP measure ignores the following. One last thing on that list, okay? The distinction between the production that makes our life better and the one that only stops our lives from becoming worse is not made in GDP. Okay, I know it's a little more complicated to understand. Pay attention, okay? GDP does not distinguish between the production that improves our lives and the production that just stops our lives from becoming worse. There is no distinguish. Okay, we'll consider some examples so that it's easier for you to understand. The one example that is given here in your notes as well as your study material is that the expenditure which the government is making on police. Okay, so consider that the crime rate in the country started rising. The crime rate started rising. Okay, the crime rate started rising, and to counter that, the government spent more money on police force, hired new people, spent more money, increased the budget, and now the crime rate seems to be under control. But since the additional police force were hired, the expenditure that the government had made on those police activities increased. So therefore GDP will also increase. Okay, GDP increased. The increase in GDP was because of what? The increase in crime rate. Now just take a pause here, take a deep breath and see and understand, does this increase in GDP in any way improve your lives? Does this GDP increase in any way improve your lives? No. It stops your lives from becoming worse. If the government would not have spent the additional amount on police activities, the crime rate would not have been controlled, which would have had a negative impact on your lives. Okay, understood. So somehow the increase in GDP has stopped your lives from becoming worse, but at the same time it has not helped you improve the life as well. Correct? But is GDP going to distinguish between this? Does the GDP number tell you, okay, that this GDP increase is from those activities which are actually stopping your lives from worsening? They are not improving your life, but they are stopping your lives from becoming worse. No, right? That is one of the major limitations. Okay. On one side, there is no distinguish between these activities which help improves our life and which just stops our lives from becoming worse. So there is no distinguish, that is one aspect. On the other side, try to understand that the increase in GDP is because of increase in crime rate. That's altogether a different point to ponder on, that the increase in GDP is because of increase in crime rate. So should we be happy about it? That okay, the crime rate in the country is increasing, we don't care about it, the GDP is increasing. The GDP increase will not even show that it is because of increase in crime rate. The GDP increase will nowhere state that this increase is due to increase in crime rate. Right? Similarly, one more example is given in your study materials. That is when there is an increase in the automobile accidents. When the automobile accidents increase, that is also going to give a rise to our GDP. See, when automobile accidents increase, the expenses on lawyers, the expenses on repairs, medical services, they all increase. Insurance, they all increase. Correct? So it is going to increase the GDP, of course. But will that increase in GDP good for the country? No, because it is due to increase in automobile accidents. Unfortunately, there is no way you can segregate the GDP. You cannot tell in any way that okay, this part of GDP is because of activities like accidents and crime rate increase, and therefore this GDP is not good. Now there is no such mechanism which can do that, and that becomes one of the major limitations of GDP. I hope you understood this. Okay. Very quickly, we are going to read this. The distinction between production that makes better off and production that only prevents us from becoming worse off is not made in GDP. Okay, GDP ignores that. For example, defense expenditure such as on police protection. It does not improve our life, it just prevents our lives from becoming worse. Okay. The increased expenditure on police due to increase in crimes may increase GDP, but these expenses only prevent us from becoming worse off. It does not improve our lives, it just prevents our lives from becoming worse off. However, no reflection is made in national income of the negative impacts of higher crime rates. Higher crime rates is not even considered anywhere. Okay. As another example, automobile accidents result in production of repairs, medical services, insurance, legal services, all of which are production included in GDP. They are all included in GDP. So GDP is definitely going to rise, but it is rising because of what? Automobile accidents. Okay, so this will not be considered in GDP. So these are some limitations of GDP. Other than these, there are some conceptual difficulties as well. What are those? These are simple one-liner points, okay? A lack of an agreed definition of national income. So different countries, different economists have different versions, different definitions of national income, and therefore it is not possible or rather not advisable to compare the national income of different countries because they all have different perceptions of national income. Okay. Next, there is no accurate distinction between final and intermediate goods. There is often a confusion regarding that whether certain goods are final or intermediate. It becomes difficult at times to identify. Then there is issue of transfer payments, that we are not considering transfer payments as incomes, but the money that people receive as transfer incomes, they are going to spend it on goods and services anyways. So it is going to give rise to the demand. It is going to generate additional production requirement, right? But how do we deal with it? We have no clue. Services of durable goods, that is also again a problem. Durable goods like car, refrigerator, washing machine, TV, etc. Very often when you purchase these goods, they give you a free service, right? One service free, two services free, three services free. So in reality, we all understand that nothing is free. The price of the service has already been included in the price of the product itself. No service is free, right? Nothing is free. The price that you pay for the product is inclusive of the price for the service as well. Then how do you value these services? Because the service will obviously not be provided in the same year. The service is usually provided in the next year or next to next year. So how do you value these? Right? That also becomes a problem. Then difficulty in incorporating distribution of income. We just discussed this, that as a limitation, that it's not possible to understand distribution of income through national income analysis or GDP analysis. So how do you incorporate that? That is also a conceptual difficulty. This is also a good point. Value of new goods at a constant price. See, currently our base year is 2011-12, correct? So, for example, if I want to calculate the GDP at constant price for the year 2018-19, what I am going to do is, I am going to take the production of 2018-19, multiply it with the prices of 2011-12 to obtain GDP at constant price. This is the process, right? What if some goods were invented in 2017-18? They were invented in 2017-18. They did not exist in 2011-12. The goods which did not even exist in 2011-12, how do I find out a constant price value for that? Understand? So that is also a conceptual difficulty. And lastly, valuation of government services. Sometimes it becomes difficult to value the government services properly because the impact it has on people's lives is not so easy to measure. Right? So these are some of the conceptual difficulties. Similarly, there are other challenges as well. What are those other challenges? See, first, inadequacy of data and lack of reliability of available data. So either the data is not available itself, or even if it is available, its reliability is a question mark. So based on this inadequate data or unreliable data, it is difficult to calculate accurate national income. Then there is presence of non-monetized sector. Non-monetized sector is the sector where transactions are not undertaken through monetary exchanges. So simple language, barter system, right? So I know barter system is no longer majorly used, but still in rural parts of the country, the remote areas, people who know each other very well, they don't enter into monetized transactions often. They can fulfill the requirements for one another very easily by exchange of goods directly. So they don't enter into monetized transactions. So it becomes difficult to, incorporate these non-monetized transactions in national income counting. Then there is production for self-consumption. It's very difficult to calculate how much has been produced for self-consumption. It's not so easy to identify, right? Though we know that production for self-consumption should be included in national income, but how to value it, how to estimate it, that is a problem. Absence of recording of incomes due to illiteracy and ignorance. So very often people don't record their incomes and either that is because they are illiterate, they are not educated enough to make a proper recording of their incomes, and sometimes it's because of ignorance. Either ways. But if incomes are not properly recorded, it will not be possible for us to calculate proper national income figure. There is lack of proper occupational classification. Sometimes it becomes difficult to, clearly identify that in which particular sector a person is working. In India, it's quite normally seen that a person is involved in 2 or 3 kinds of different activities. So occupational classification becomes difficult. And lastly, the accurate estimation of consumption of fixed capital. Consumption of fixed capital is nothing but depreciation. Okay, so we know that depreciation is always estimated, right? And since depreciation is estimated, the national income figure that we obtain is also estimated. It cannot be accurate. So it's a challenge. How do we calculate the most accurate depreciation amount? Okay, that's a challenge. So these are some of the challenges. Okay, so we just discussed the limitations, which were very detailed. Along with that, we discussed some conceptual difficulties and other challenges which are faced during the calculation of national income. This officially brings us to the end of this unit. Okay, officially it's the end. However, we are going to first of all just glance through these points in your notes. There is not much to be discussed there in the notes. It's the same thing which is here, that is being kept in your notes as well. So there is not much of a difference, but we are quickly glancing through it so that you are comfortable when reading it. And then after, we are going to solve numericals. Okay, let's start. Okay, the system of regional accounts, that is where we started today's discussion. So regional accounts provide an integrated database on the innumerable transactions taking place in the regional economy and help decision making at regional level. Practically all states and union territories of India compute state income estimates, district level estimates. State income, which is also known as NSDP, this is its definition. It's a measure in monetary terms of the volume of all goods and services produced in the state within a given period of time, generally a year, accounted without duplication. Okay. The per capita state income can also be calculated, dividing NSDP with the population of the state. The state level estimates are prepared by state income units of respective state DES. The CSO will assist the states in the preparation of these estimates by rendering advice on conceptual and methodological problems. So if the DES face any problem, they will be advised by, directed by, guided by CSO. Because even at national level, CSO is the one which makes all the strategies and all the rules regarding calculation of national income. So for district level and state level as well, if there are some problems, CSO will help. Okay. And now this part is about supra-regional sectors. So in the preparation of state income estimates, certain activities such as railways, communications, banking and insurance, and central government administration that cut across state boundaries, and thus their economic contribution cannot be assigned to any one state directly, are known as supra-regional sectors. What do we do with them? The estimate for these supra-regional activities are compiled for the economy as a whole and allocated to the states on the basis of relevant indicators. Okay, fine. Then after, we discuss the limitations, but I am not going to read these limitations here. These are exact same wordings that we have covered there in the presentation. So this should be left to you. And these are the conceptual difficulties that we just discussed, and these are the challenges. Right? So this reading part I am leaving for you guys. It's the same thing. There are no changes in the sentence construction as well. The exact same wordings we have covered in presentation. Okay. Now we come to numericals. Okay. Now as regards numericals, at the end of your study material, you have been given 4 numericals. At the end of this unit, at the end of this unit in your study materials given by ICAI, you have been given 4 numericals. So I am not covering them in the class here. I am giving you additional numericals. The solution to those numericals you already have with you. And I am confident once we are done with this, you will be able to crack those as well. But still, if you find any problems, you are always free to ask. You can always send your doubts to me. But I think you will not have any problem. One of those questions might require you to think a little, but other than that, the rest of the three are quite easy. Okay. But anyways, that will be your homework. Since you already have the answers, so I don't want to discuss them here. We are going to discuss these questions here so that you can have some practice of those questions which are different to you, right? Okay. So these are the numericals. The first numerical we are taking up right now. See, from the following information, you are required to estimate three things: value of output, net value added at factor cost, and prove that the income generated is equals to Ndpfc. Okay. Now, what is given to you? Increase in unsold stock, sales, purchase of raw materials, indirect taxes, subsidies, operating surplus, mixed income, wages and salaries, depreciation. These are all the information that is available. I have also given some space here in your notes so that you can write the answer here itself. If for some reason the space is not enough for you, you can add it or you can give a reference of it somewhere in your notes, in your own notes, and you can write it there. Okay. So, answer to the first part. What is the first part? First part is asking us to calculate value of output. Okay. Now, how do I find value of output from the details given? What do I do to find out value of output? See, if you remember, value of output as we discussed was sales plus change in stock. Do you remember that one O2 concept that I explained, sales plus change in stock, or sales plus closing stock minus opening stock, right? We can use that particular logic here. See, you have sales, you have increase in unsold stock. Increase in unsold stock means closing stock is higher than opening stock. Okay. So, value of output can be calculated as sales plus change in stock. Sales is 10,625 and change in stock is 600. I am adding it because it's increase, okay? The change in stock I am adding because it's increase. Had it been decrease, I would have reduced it. I would have subtracted it, okay? 10,625 plus 600 will give me 11,225. So 11,225 crores is your answer to the first part. Okay. Now coming to the second part. Second part, we are required to find out NVA at factor cost. NVA factor cost. Okay. How do I find out NVA factor cost? Don't rush, okay? Just think about it in your head for a minute. NVA factor cost. See, I can find out GVA at market price. How do I find out GVA at market price? If I can add the value added of all sectors in the economy, I can find GVA at market price. Okay. The value added is nothing but value of output minus intermediate consumption. Value of output we have just calculated 11,225 and intermediate consumption is given to us as raw materials. Purchase of raw materials. See, 2,625. Okay, this one. So we'll be using that. So value of output minus intermediate consumption minus, okay, value of output minus intermediate consumption is going to give you what? GVA market price. First I will want to find out NVA market price. So NVA market price, for that I will have to deduct depreciation. Okay, so value of output minus intermediate consumption minus depreciation is going to give me NVA market price. But I want to find out NVA factor cost. How do I find out NVA factor cost now? I will have to deduct indirect taxes and add subsidies. Okay, if you are not able to understand the entire formula in just one part, you can also divide it. Like first calculate GVAMP, from GVAMP calculate NVAMP, then from NVAMP calculate Ndpfc. So you can also do it stepwise, whatever you are comfortable with. Okay. So this is the formula now for Ndpfc. We just have to put in the values to get our answer. So 11,225 minus intermediate consumption is raw material 2,625 minus depreciation is 500 minus indirect taxes are 1,200 and subsidies are 400. Correct? So how much will this be? 11,225 minus 2,625 minus 500 minus 1,200 plus 400. That will give me 7,300 crores. That is the answer to second part. Okay, clear? See, now third part says prove that income generated is equals to Ndpfc. Income generated is equals to Ndpfc. Ndpfc you already have calculated 7,300. You just have to find out income generated. I'll just help you locate that in the question. Income generated. Income method. So they are suggesting income method. That means you have to add rent, wages, interest, profit, or labor income, non-labor income, mixed income. Okay. See what is the data given in the question. We have been given, see, operating surplus. Operating surplus. This is something that you need for third part. Mixed income. This is again something that you need for third part. Wages and salaries. Useful in third part. Okay, now add these three. 3,460 plus 100 plus 3,740. That will give you 7,300. That is your income. Okay, so proven that Ndpfc is equals to income generated. Okay, you'll be able to write that on your own, right? Or should I write it down for you? Okay. Income generated is equals to mixed income plus wages and salaries plus operating surplus. Mixed income was 100, wages and salaries 3,460 and 3,740 equals to 7,300 crores. Hence it is proven. You have to add this sentence at the end. Hence it is proven that the income generated is equals to Ndpfc. Okay, sure. You can copy this and then move to the next question. Okay, now coming to question number 2. See, you are required to find out GDP factor cost. GDP factor cost, okay. And what are the information that is available to us? We have PFCE, private final consumption expenditure. We have NDCF, net domestic capital formation. Okay, please pay attention, it's net, right? Then we have change in stock. See, now this is a trick adjustment which is given. Change in stock is already included in GDCF. If you remember the discussion that we had, I gave you some of the inclusions in GDCF. Out of that, one was change in stock, change in inventory, right? So it's already there in GDCF. So this information is not necessary. Okay. Next comes NFIA, then net indirect taxes, government final consumption expenditure, that is GFCE, okay, net exports, and consumption of fixed capital. Now from the data given, I believe we will be required to use expenditure method. So I want GDPFC. So first of all, I am going to find out GDPMP, right? See, how do we do that? In this case, I will be able to find out Ndpmp first, because I have been given NDCF instead of GDCF. So Ndpmp will be what? PFCE plus NDCF. Please do not add change in stock, okay? Change in stock is already there in NDCF. We don't have to add it again. So no change in stock. NFI not required right now. NIT not required right now. GFCE I will have to add. And net exports I'll have to add. Okay. So this is going to give us 800 plus 150 plus 450 plus negative 30. Okay, this will be how much? 1400 and minus 30, so 1370 crores. This is Ndpmp. Then I'm going to convert this to GDPFC. This is what I want, right? GDPFC. So how do I do that? Ndpmp plus depreciation. Consumption of fixed capital is nothing but depreciation, right? So you can write it for your reference here. It is depreciation. So plus depreciation, and from market price I am trying to find out factor cost, so minus net indirect taxes. So Ndpmp was 1370 plus depreciation of 50 and minus net indirect taxes were 120. So see how much is this? 1370 plus 50 minus 120, that is 1300. So 1300 crores. This is your answer. Okay, note it down. Okay, so now coming to practical question 3. Your numerical 3. Calculate national income by income and expenditure method. You are required to use both the methods, okay, and the answer should tally. Okay, you cannot just write a note that due to inadequate data, the two answers are not matching. ऐसा नहीं होगा. You will have to make sure that both the answers are tallied. Okay, see. First of all, since we already know what is required, we want to find out national income, that is Ndpfc, by income method as well as expenditure method. So first I am going to scan the entire question and find out the relevant information for income method only. I don't want to look at anything which does not relate with income method. So no data for expenditure method right now. Process only the data which is relevant for income method. For income method we need rent, wages, interest, profit, or we can say we need the compensation to employees, operating surplus and mixed income. Right? Other than that we'll need an FIA, because from converting from Ndpfc to Npfc we'll need an FIA. So these are the only things we are looking for. So look at the question, see how you are able to calculate it. Whatever is relevant for income method, I am going to mark that with red. Okay. So compensation by employees, yes, it is related to income method. Imports not relevant, mixed income relevant. Gross fixed capital formation not required, TFCE not required, consumption of fixed capital, that is depreciation, not required, NFIA required, indirect tax not required, change in stock not required, subsidies not required, rent is required, interest I will need, profit is required. Okay, so these are the only things basically I think are required for calculation using income method. So let's try and write the answer down. Income method. First of all, we are going to use Ndpfc. Okay, Ndpfc. Whatever usually we do, nothing to be taken off the course. We'll follow our normal routine. So the formula we use will be compensation of employees plus mixed income plus NFIA will be added later, okay, so not now. Rent, interest and profit. This is it for Ndpfc. Just put in the values now. So 250, 50, 100, 250. So this will be what? 300, 300 plus 300, 600 and 650. 650 is your Ndpfc. Npfc, which is nothing but national income, is Ndpfc plus NFIA, which is equals to 650 plus 20 is equals to 670 crores. Okay, this is your national income by income method. Now the same thing we are also required to calculate by expenditure method. Okay, so now let's try and understand how do we calculate national income by expenditure method. By expenditure method, the first variable that we are able to find out is either GDPMP or NDPMP, depending upon we have been given GDCF or NDCF. Okay, so let's start with it. expenditure method. Okay, what all data do I have for expenditure method? Okay, one important thing that you need to understand here is that you have been given gross, but it's not GDCF. It's gross, but it's not GDCF, guys. It's gross, only fixed capital formation. Only fixed capital is given, and therefore this change in stock is now important for me. See, had it been GDCF would already have included change in stock, but this is only fixed capital formation. Only fixed capital is considered here. That means that inventory change has not been taken into consideration. I told you, numericals can get very tricky. You will have to read and interpret everything properly. Okay, so here change in stock is relevant, don't forget. You will have to add it because what is given to you is only fixed capital component. The inventory component is yet to be added. Had they written GDCF, it would have been inclusive of change in stock. So nothing to worry. Okay, see. So let me first prepare the formula for GDP MP. From GDP MP, then we'll find out Ndpfc by our usual technique, right? GDP MP first of all. So let's prepare the formula. What all things do I need for GDP MP? I'm just going to tick that. Gross fixed capital formation I will need. PFCE I will need. Consumption of fixed capital I will not require. Indirect taxes not required. Change in stock required. Subsidy is not required right now. Exports not required. And GFCE of course required. So let's write down gross fixed capital formation. Along with I write down change in stock. Okay, this combined, this together is going to give me GDCF. Right? I hope you understand. Huh? Pay attention. This is not sleepy time. Okay. Then PFCE. Change in stock we have already covered, and GFCE. Okay, do we have exports and imports? Yes, we have exports and imports. So net exports. So plus exports minus imports. Okay, this will give us GDP market price. Let's put in the values. Gross fixed capital formation was 120. Change in stock is 20. PFCE was 550 and GFCE was 60. 550 plus 60 plus exports 10 and minus imports 20. Okay, let us calculate this. So 120 this is 740. From this I want to find out Ndpfc. Ndpfc will be GDP MP minus depreciation first of all, then plus NFIA minus indirect taxes and plus subsidies. Putting the values, this is 740. Depreciation was given to you as consumption of fixed capital. Okay, this is depreciation. So 10 plus NFIA. NFIA is given as 20. Okay. Minus indirect taxes. Indirect taxes are 100 and subsidies are 20. So minus 100 plus 20. Let's see how much is this. Okay, this comes to 670, which was also our answer in income method, right? So happy. Be tallied. Okay. I hope you enjoyed this. It was a good question, right? Okay, copy it down. Then we move to the next numerical. So now coming at fourth numerical. I hope you're enjoying numericals, huh? It's fun, right? They ask it for 5 marks. Now, calculate Ndpfc by expenditure method and GDP-MP by income method. Ndpfc by expenditure and GDP-MP by income. Now, this is quite different from what originally those methods are designed to calculate. See, if you remember, the expenditure method originally is designed to calculate GDP-MP, and the income method is originally designed to calculate Ndpfc, but they have asked it in contradiction to what is the general method of calculation. So you will have to apply those 3 rules as well here. Okay. First, let's try to calculate Ndpfc by expenditure method. Okay. All those items which are relevant to expenditure method, we are going to tick it with red. And we are going to consider only those items when we are using expenditure method. Okay. See, gross fixed capital formation. Guys, remember it's only fixed capital formation. So if there is a change in stock, that will have to be covered here. Okay. Next is PFCE. PFCE, yes, it is used in expenditure method. Okay. Then exports, imports, yes. Then government final consumption expenditure. Consumption of fixed capital is not required right now because I am calculating GDP-MP. So I don't need it right now. Subsidies, indirect tax not required right now. Rent, interest, profit not needed. Change in stock will be needed, yes. Okay. So gross fixed capital formation plus change in stock will give me GDCF. I have PFCE, I have GFCE, I have exports and imports. So this completes my requirement for GDP-MP. Okay, let's calculate GDP-MP then first of all. Expenditure method. First, we are going to calculate GDP-MP, formula being consumption of, gross fixed capital formation, right? Gross fixed capital formation plus change in stock. Gross fixed capital formation plus change in stock plus PFCE plus GFCE. plus exports minus imports. Okay, so gross fixed capital formation was 130 and change in stock was 30. So 130 plus 30 plus change in stock. Change in stock is done. Okay, sorry. PFCE is 510. GFC is 70. Exports 50 and imports 60. So plus 50 minus 60. Okay, let's calculate this. 130 plus 30 plus 510 plus 70 plus 50 minus 60. So this will give me 730 crores. From this, I can calculate whatever is asked from me. By expenditure method, we are required to find out Ndpfc. Okay, give them Ndpfc. Ndpfc is GDP market price minus depreciation plus NFIA minus indirect tax plus subsidies. Okay, GDP market price we know already 730 minus depreciation is 40, consumption of fixed capital, right? Plus NFIA. NFIA guys, how much? It's -5. Okay. Minus indirect tax, how much? 90 and subsidies 10. Okay, let's see this. Okay, sorry, I have taken here NFIA as well, but we are finding out Ndpfc, not NNPFC. So we don't need to deduct or add for that matter in this case. NFIA, okay, sorry. This has to be removed. Okay, now this should be your answer. 730 minus 40 minus 90 plus 10. So this will be 610. This is your answer. This is Ndpfc by expenditure method. Okay, clear? Right? Now, using income method, we want to find out GDPMP. So let's do that. Using income method, let's try to find out GDPMP. Okay, the default calculation of income method will give us Ndpfc. So first let's find out Ndpfc by income method. Okay, then we will convert it to GDPMP. By the way, Ndpfc you already have calculated in the expenditure method as well. So this will be a cross tally for you as well. Right? It will help you cross tally that your income method and expenditure are both giving you the same answers. So Ndpfc by income method. What do I do? Mixed income of self-employed and compensation of employees and rent, interest and profit Okay, now interest on national debt is an interesting point. Interest on national debt will not be considered while calculating national income. Sir, it is also interest. Why isn't it considered? See, interest on national debt means the interest on the amounts which are borrowed by the government. Okay, now government is borrowing for consumption purpose, and the interest paid on borrowings taken for consumption purpose are not factor incomes. If I'm earning interest on the borrowings which I have given for productive purposes, then that interest will be considered, and it is already given here. That interest is already covered here. See, it's here. Okay, but interest on national debt will never be a part of national income calculation. Remember this, interest on national debt never to be considered while taking national income calculations. Why? Because interest on national debt is on the debt which is taken by the government for consumption purposes, and since the government has taken that money, that borrowings, for consumption purposes, therefore the interest paid on it will not be considered as a part of national income calculation. Okay, so the remaining things will be adding up. So mixed income plus compensation of employees plus rent, interest and profit. Right? That's it. Only three things to be added to find out Ndpfc. Okay. How much is mixed income? 280. Compensation of employees 240. So 280 plus 240, and rent, interest and profit is 90. So how much will this be? 280 plus 240 plus 90, that is 610. See, this is a cross verification by expenditure method as well. What we calculated was 610 crores. Okay. Now we do not want Ndpfc. What we want is GDP-MP. So let's give them GDP-MP. GDP-MP. How much? Ndpfc we already have, right? So plus depreciation and factor cost to market price, so plus indirect taxes minus subsidies. Okay, so 610 plus depreciation, how much? Consumption of fixed capital was 40. Indirect tax I think was 90. Where is it? Yeah, 90, and subsidies are 10. So 600 plus 130, that is 730. See, again this is tallied up. Tallied with expenditure method. Okay, so I hope you are comfortable with this type of questions now, right? Okay, note it down, pause your video, note it down, and then we'll continue with the next numerical. Okay, now coming to next question. From the following data, calculate GDP market price and subsidies. You have to calculate two things: GDP market price and subsidies. Okay, they have not specified the method, so we are free to use any method that we think is fine. Okay, whatever data is available, we have to decide using that data which method is best suitable for us. Now let's consider the data. Government final consumption expenditure. Indirect taxes, Ndpfc, GA, gross fixed capital formation, mixed income of self-employed, net addition to stocks, compensation of employees, depreciation, private final consumption expenditure, exports, imports, and NFIA. Okay, now if you notice, we have not been given the operating surplus part for income method. See, income method के लिए we have been given mixed income, we have been given compensation of employees, but we do not have the operating surplus part, that is rent, interest, profit is not given. Now if that is the situation, we will not be able to use income method. Okay, so leave income method aside. Let's try for expenditure method. For expenditure method, in order to find out GDP MP, we'll need gross final consumption expenditure, government final consumption expenditure, GFCE, that is given, gross fixed capital formation given, then net addition to stocks is also available, PFCE is also given, exports, imports are also given. So I think expenditure method is best suited here. And now we'll be able to find out GDP MP using expenditure method. So GDP MP is government final consumption expenditure plus private final consumption expenditure plus gross fixed capital formation plus net addition to stocks plus exports minus imports. So GFC is how much? 7,000 plus PFCE how much? 44,000 plus depreciation, sorry, not depreciation, gross fixed capital formation 13,000 plus net addition to stock 10,000 plus exports 4,800 minus imports 5,600. Okay, so 7,000 plus 44,000 plus 13,000 plus 10,000 plus 4,800 minus 5,600 will give us 73,200. This is your answer to first part. Okay. In second part, they want us to find out subsidies. Okay. What are we going to do about that? See, subsidies, they have given us Ndpfc. So we are going to use that Ndpfc information to find out subsidies. First, let's write down the Ndpfc formula from GDP MP and let's see how we can calculate subsidies from that. So Ndpfc is equals to GDP MP minus depreciation plus NFIA minus IT plus subsidies. Okay, GDP MP we know is 73,200. Ndpfc is also given to us 61,700 minus depreciation is 4,000 plus NFIA. NFIA is how much? Negative 300. So this is going to be minus 300 minus indirect taxes. How much? Indirect taxes are 9,000 and subsidies we are supposed to find out. But I think now we can easily find out subsidies. Therefore, subsidies, that is S, equals to, just make the calculations on calculator and write the answer. 73,200 or it's 1800. Okay, 1800 crores. That is your answer. Okay, now I think you must be pretty comfortable with the numericals, right? Okay, so copy this down and then we move to the next numerical. Yes guys, so now coming to numerical 6. This is the last numerical that I have kept in your notes. After completing this, you should be trying the numericals given in your study materials on your own. Please do not look at the answers, okay? Be honest to yourself. Please don't look at the answers. Try it on your own. See where you are struggling, at which part you are not able to think ahead. Find out that barrier for you so that you can overcome it. Don't just look at the answer straight away. It is not going to help you. Fine? Now, this is a very good question. Okay, pay attention. Though it looks small, but it's really troublesome. Okay, see. Calculate sales from the following data. You have been asked to calculate sales. What is given? Intermediate costs are given. Consumption of fixed capital is given. That is depreciation. Change in stock is given. Subsidy is given. Net value added at factor cost is given. And exports are given. Okay. So now how do I calculate sales from the following data? That is the question. See, it's not going to be easy, so you will have to think a little. This question is more technical than what we have solved so far. It's last question, right? Has to be something special. Now, I want to find out sales. When I think of sales, one thing that hits my mind is the formula of value of output. Remember, value of output, as we know, is sales plus change in stock. Correct? Value of output is sales plus change in stock. I don't know value of output yet. Change in stock is given to me, minus 50. But value of output I don't know. If somehow I can find out the value of output, I will be able to find out my sales. Okay, so now my focus shifts to finding out value of output. Now how do I find out value of output? Now try to remember what formula is dealing with value of output, which concept is dealing with value of output. Value of output you use when you are calculating value added. Okay, so I'm leaving some space for this one and I'm going to find out value added. Value added, I am putting the formula of GVA market price. GVA market price, as we know, is value of output minus intermediate consumption. Value of output minus intermediate consumption will give me GVA MP. Let's see if we have any data available here. I don't have GVA MP yet. I have intermediate costs though. Okay, so once again, it doesn't seem like I will be able to use GVA MP directly. I have been given, however, Ndpfc. Net value added at factor cost is given. Let's see what I can do with that now. So step 3. I want to find out now GVA MP using Ndpfc. Okay, it's a process. So Ndpfc, this is net, this is gross, so I will have to add depreciation. Okay, and from factor cost I want to calculate market price, so I will add indirect tax and I will reduce subsidies. If you look at the question carefully, there is no indirect tax given, so only thing that I have to do here is deduct subsidy. Okay, so Ndpfc, this is where my answer will begin from. Ndpfc is given to me 1300 plus depreciation, that is consumption of fixed capital, 80, and minus subsidy, which is 60. So this will be what, 1320. Okay, now using this 1320, I am going to get to value of output. So I'll keep 1320 here. Value of output is something which I'm trying to find, and intermediate costs are given to me as 700. So this will now be value of output. Value of output is equals to 1320 plus 700, that is 2020. Okay, and now using this value of output, I will be able to find my sales. So this is 2020. Sales I am still finding out, and change in stock is given to me as minus 50. So sales will be equals to 2070 crores. This is your answer. How's that? Good? Nice question, right? So you just have, you can also give numbers here, okay, if you want. See, this is the first thing that I calculated. From that I calculated this, and then from that I calculated this. So reverse calculation kind of. Okay, fine. So this is it about the unit 1 of chapter 1, and I will also conclude this session here. Hope you had fun. You understood the concepts of national income and its measurement, and in the next unit we'll be looking at the determination of national income. We are going to look at the Keynesian theory. Professor J.M. Keynes, John Maynard Keynes, has given a theory to determine the equilibrium national income of a nation. And how is it done? We are going to see that. So till then, stay tuned, stay safe, please take care of yourself and keep studying. Okay, bye guys, have fun.